I bought 100 shares of SCHD exactly 1 year ago. And today, I'm going to reveal the real numbers. Did I make money? Did I lose money? And was it actually worth tying up thousands of dollars in this dividend ETF for 12 months? Stick around because I'm breaking down my returns, my dividend income, and whether I'd still buy SCHD today if I were starting from scratch. Hey everyone, welcome back to the channel. If you're new here, my name is Your Name, and I talk about long-term investing, dividend growth strategies, and building passive income. Now, if you've been following the U.S. stock market over the past couple of years, you've probably heard of SCHD, the Schwab U.S. Dividend Equity ETF. It's become one of the most talked about dividend ETFs, with investors calling it a must-have for long-term portfolios. So, last year, I decided to put my money where my mouth is and actually buy 100 shares of SCHD. In this video, I'll walk you through my one-year results, including exactly how much I invested, how much dividend income one earned, my total return including price changes, the pros and cons I've experienced holding SCHD, and whether I'm still buying today. Make sure you stick to the end because I'll also share my plan for the next year and what I think SCHD's future looks like. Section 1. Why I invested. Before I reveal the numbers, let me explain why I chose SCHD in the first place. SCHD is a dividend equity ETF created by Charles Schwab. It holds about 100 of the top U.S. companies that have a consistent track record of paying dividends. What makes SCHD special is high-quality holdings. We're talking about blue-chip names like Pepsi, Coca-Cola, Texas Instruments, Amgen, and Home Depot. Strong dividend yield. Historically, SCHD has had a yield of around 3 to 4%, which is much higher than the S&P 500. Dividend growth. The dividends don't just stay flat. Over the past 10 years, SCHD has consistently increased its dividend payouts. Low expense ratio, just 0.06%, which means I keep almost all the returns. For me, SCHD checked a lot of boxes. Passive income, long-term growth, and diversification across solid U.S. companies. So last year, I decided to buy 100 shares. My average cost per share was around $72, meaning I invested roughly $7,200 in total. Section 2. My dividend income. All right, now let's get into the juicy part, the dividend income. SCHD pays dividends quarterly, so that means I got 4 payments throughout the year. Here's how it went. First quarter, around $65 second quarter, about $74 third quarter, $78 fourth quarter, $82. So in total, I earned $299 in dividends from my 100 shares of SCHD in 1 year. That's roughly a 4.1% yield on my initial investment. Now, some of you might be thinking, $299 doesn't sound like much. But let me put that into perspective. That's passive income. I didn't have to clock into a job. I didn't have to run a side hustle. I didn't have to sell anything online. All I did was hold 100 shares. And here's the kicker. If I reinvest those dividends, I'll be buying more shares, which will generate even more dividends next year. That's the power of compounding. Section 3. Price performance. But dividends are just one piece of the puzzle. What about the share price itself? When I bought SCHD, it was trading at around $72 per share. Over the past year, the price has bounced around quite a bit, moving between the mid-60s and mid-70s. As of today, SCHD is sitting at about $74 per share. That means on my 100 shares, I got about a $200 unrealized gain in price appreciation. So if we combine $299 in dividends, $200 in capital gains, that's a total 1-year return of roughly $499, or about 6.9% on my $7,200 investment. Now, is that life-changing money? No, but remember, this is just 1 year of results in a fairly volatile market. The real magic of SCHD happens over 5, 10, and 20 years. Section 4. Pros and cons. Let's break down the pros and cons I've experienced holding SCHD for 1 year. Pros: reliable dividends. The quarterly payouts are steady and predictable. Solid companies. These aren't speculative startups. SCHD owns established, profitable businesses. Low cost. With just a 0.06% expense ratio, I'm not losing returns to fees. recession resilient. Many of the companies in SCHD are dividend aristocrats that keep paying even during downturns. Cons, not super high growth. SCHD isn't the S&P 500. It's more defensive, which means in huge bull markets, it won't skyrocket as much. Sector concentration. SCHD is heavily weighted in financials and industrials, so it's not perfectly diversified. Dividend fluctuations. Unlike individual stocks that increase dividends every year, SCHD's dividend can fluctuate up or down depending on holdings. Overall, though, the pros outweigh the cons for me. I like the balance between income and stability. Section 5. Would I still buy SCHD today? So the big question is, after 1 year, would I still buy SCHD today? For me, the answer is yes. Here's why. I'm in this for the long-term dividend growth, not for a quick flip. SCHD gives me exposure to strong U.S. dividend payers without me needing to pick individual stocks. Over the past decade, SCHD has averaged an 11 to 12% annual total return, which is fantastic for a dividend-focused fund. That said, I'm not putting 100% of my portfolio into SCHD. I still own some S&P 500 ETFs, some international exposure, and a few growth stocks. But SCHD is one of the core pieces of my dividend strategy. Section 6. Lessons learned holding SCHD for 1 year taught me a few valuable lessons. Dividends take time. You won't feel rich after 12 months, but the compounding builds year after year. Don't obsess over short-term price movements. SCHD went down to the $1.60s at one point. If I panicked and sold, I'd have missed the rebound and the dividends. Reinvesting matters. Even if it's just $70 every quarter, reinvesting adds up big time over decades. So the main takeaway is SCHD isn't a get-rich-quick play. It's a long-term wealth-building machine. Section 7. What's next? So what's my plan going forward? I'm planning to keep adding to my SCHD position over time, especially on dips. My goal is to eventually reach 500 shares, which at today's dividend rate would bring me around $1,500 a year in passive income. That's enough to cover a utility bill, groceries, or even a portion of rent. And that's the beauty of dividend investing. Little by little, you're building a stream of income that can eventually cover your living expenses. So after 1 year of holding 100 shares of SCHD, I've earned $299 in dividends, $200 in price gains, and most importantly, I've gained confidence in my long-term dividend strategy. SCHD isn't flashy. It's not a meme stock, but it's consistent, reliable, and in my opinion, one of the best dividend ETFs out there. Now I want to hear from you. Do you own SCHD? Are you planning to buy it? Or do you prefer another dividend ETF? Drop your thoughts in the comments below. If you found this video helpful, make sure to hit that like button, subscribe for more dividend investing content, and share this with someone who's thinking about buying SCHD. Thanks so much for watching, and I'll see you in the next one.